Welcome back to the deep dive. So you've sent us this huge stack of articles, and let's be honest, it can be a bit intimidating trying to figure out how to become a registered Canadian entrepreneur.
It really can.
And we know you're looking for the shortcut, the real deal. So today, our mission is to deliver just that. The absolute non-negotiable checklist you have to complete before you even think about officially registering a business here in Canada.
That's exactly right.
Yeah.
I mean, for anyone launching something new, or maybe you're formalizing a side hustle that's been running, casually, this deep dive is your legal and financial roadmap.
Okay.
We're basically distilling all the expert advice out there, and they all say one thing. Rushing this foundational part is the single costliest mistake you can make.
Right, because this isn't just paperwork, is it? We're talking about building the legal firewalls, the financial rails that are going to protect your future growth.
Absolutely. If you miss a step now, you could be looking at major compliance headaches, unnecessary tax bills, or even worse.
What's worse?
Losing out on investment when you're trying to scale. It happens all the time.
Okay, so let's get into it. Let's start with the absolute bedrock, the business's core identity.
The first, and I'd say most crucial decision, is choosing your legal structure. This is the big one. It dictates everything from how you file taxes to, your personal financial safety.
So this is where you decide who you are in the eyes of the law.
Precisely.
Okay, so let's break this down. In Canada, we're basically looking at three main options, right? Sole proprietorship, partnership, and the corporation.
Those are the big three, yeah.
What are the trade-offs, especially around that one word that I think worries everyone? Liability.
You hit the nail on the head. Liability is the key difference. The sole proprietorship is, it's by far the simplest and cheapest to get going.
But and cheap, I like that.
But you and the business are legally the exact same thing. There's no separation, which is great for simplicity, but it means you are personally on the hook for all business debts.
So just to be crystal clear, if I take out a business loan, or something goes wrong, maybe a client sues me, that risk comes directly for my personal assets.
Yes. Your house, your savings, it could all be on the line. That's the trade-off.
Wow.
Okay.
And a partnership.
It's pretty similar on the liability front. The partners are personally responsible, but now that risk is shared.
Which sounds like it could get complicated.
It can. And that's why this structure absolutely demands a formal partnership agreement right up front. You need to detail profit splits, roles, and, critically, what happens if someone wants out.
You can't just be a handshake deal.
No. That's a recipe for disaster.
And then we get to the one everyone's heard of, the one that just sounds more, serious, the corporation.
And it is, because this is where you get that true legal separation. A corporation is its own legal person.
A separate person.
Exactly.
Yeah.
Now, it's more complex, it's more expensive to set up and maintain, for sure, but it gives you that powerful liability protection. If the business gets sued, the liability generally stops with the business. It protects your personal wealth.
So I have to ask, because I'm sure listeners are thinking it, why wouldn't I just incorporate immediately for that safety? It seems like a no-brainer.
Well, it's a great question, and it really comes back to your long-term goals.
Okay.
If you're planning to stay small, maybe a local service or a freelance gig with moderate income, the ongoing admin and cost of a corporation might just not be worth it. A sole proprietorship is perfectly fine and manageable. But if your vision involves scaling up or taking on big loans for expansion or, and this is the key, seeking outside investors.
Venture capital, that kind of thing.
Exactly. Then incorporation is basically essential. Investors need that clear legal structure and limited liability to even consider putting money in.
So sole proprietorship is for low-risk, simple businesses. Corporation is the path if you're aiming to go big.
You got it. The choice on day one kind of defines the ceiling of your ambition.
Okay, structure decided. Now let's talk about the name. You can't just pick something catchy and run with it, can you? The sources were very clear on that.
No, you can't. This is brand protection 101. Skipping this can lead to some really costly legal fights down the road, and the type of search you need to do depends on your structure.
Right.
If you are incorporating, it's not an option, you must conduct a NUANS database name search.
NUANS, what exactly is that?
It stands for Newly Upgraded Automated Name Search. It's a system that checks to make sure your proposed corporate name isn't already taken or confusingly similar to another registered name in Canada.
So it's not just about reserving the name.
Not at all. It's about proving that your name is legally distinct. If it's too similar to another company's, the government could force you to change it later, or you could get sued.
It's like preventative legal medicine.
That's a perfect way to put it.
So NUANS is for corporations.
Right.
What about for a sole proprietorship?
Then you're dealing more with provincial or territorial registries. You still have to check that the name's available locally. But
There's always a but.
if you have national ambitions, if you want to sell across the country, the sources strongly recommend looking into a federal trademark. It gives you much broader protection.
That makes sense. Okay, so we've got the structure, we've got the name. Now we have to make friends with the government's tax department, the CRA.
Right. This is the step that makes the business real in the eyes of the government. And it all starts with one thing, the CRA business number, or BN.
The BN. The sources called it the Universal ID, which surprised me. I thought it was just for taxes, but it seems to do a lot more.
It's the central hub for your business's relationship with the federal government. You register with the CRA, you get this 9-digit BN, and then that single number acts as an umbrella for all your different government accounts.
Different accounts, like what?
Well, if you hire employees, you need a payroll deduction account. That's tied to your BN. If you plan to import or export, you need an import-export account.
Also tied to the BN.
Yep. If you're a corporation, you need a corporate income tax account. And the most common one, the GST-HST program account.
Ah, yes, the GST-HST. This seems to be where a lot of new entrepreneurs get tripped up. There's a specific rule about when you absolutely have to register, right?
There is, and it's very precise. Registration is mandatory if your business is expected to earn over $30,000 in annual revenue. That could be in a single calendar quarter or over 4 consecutive quarters.
30,000, that feels achievable for a lot of new businesses. I bet a lot of people think, great, as long as I'm under that, I don't have to worry about it. But the sources said the opposite.
They do. And this is probably the biggest aha moment for new business owners when it comes to tax. Because while it's true, you don't have to charge GST-HST if you're under that $30,000 threshold.
You also can't claim it back.
Exactly. You're leaving money on the table.
Okay, so explain that. Why would I volunteer to start collecting taxes for the government if I don't legally have to?
It's all about cash flow. When you register for GST-HST, even if you do it voluntarily, you can claim what are called input tax credits, or ITCs. These are basically refunds from the government for the GST or HST you paid on all your business expenses, your new laptop, your software, your rent, your inventory, everything.
So let's make that real. I'm a new photographer. I need to buy $10,000 worth of camera gear. In a province with 13% HST, that's $1,300 in tax I just paid.
Right. If you are not registered for GST-HST, that $1,300 is just gone. It's a cost of doing business.
But if I am registered,
you claim that $1,300 back as an ITC, the government literally refunds you for the tax you paid on your startup costs. For a new business, getting that cash back is huge.
That's a massive deal. It turns what feels like a tax burden into a strategic tool.
It really is.
Yeah.
It's a powerful incentive to register early.
Okay, so we've covered structure, name, and the core tax decisions. Now for the on-the-ground rules, the operational stuff.
Exactly. We're moving into the micro-level compliance. And that starts with securing the right permits and licenses. This is where it gets really specific to your industry and where you live.
You can be federally registered, have your BN. If you don't have the right permit from your city, you're not opening.
Not legally, no. And it's so complex. A restaurant needs health permits, fire inspections. A construction company needs municipal building permits. The source has even mentioned a case of an online seller getting a huge fine for not having the right provincial license to ship a specific type of product.
That sounds like a nightmare to figure out. How is anyone supposed to navigate all those different levels of government?
Thankfully, there's a tool for this, and it's a lifesaver. It's called BizPal.
BizPal?
Yeah, it's a government service. You go online, you enter your type of business, say dog groomer, and your location, and it generates a customized list of every single permit and license you need from the municipal, provincial, and federal levels.
Wow, so it takes the guesswork out of it.
Completely. It's an essential stop before you register.
Fantastic. Okay, so you've got your permits sorted. The next 2 steps are all about getting your financial house in order. First up, opening a business bank account.
This is non-negotiable. It's all about financial separation. Even if you're a sole proprietor and it's not legally required, you absolutely should do it. For a corporation, it is a legal necessity.
And beyond the legal side, what are the immediate benefits of doing this on day 1?
First, it just makes tracking your expenses so much easier.
Yep.
That simplifies tax time and ensures you claim every deduction you're entitled to.
Makes sense.
And second, it's about professionalism. Writing checks or getting paid into a proper business account just builds credibility with your suppliers, your clients, and the bank if you ever need a loan.
It's the financial handshake of your business.
Exactly.
And that leads to the final step, which the sources all called one of the biggest mistakes new entrepreneurs make, waiting too long to get organized. We're talking about setting up your accounting system early.
This is your anti-chaos insurance policy. So many people wait until their first tax deadline is looming, and it's just a nightmare of lost receipts and missed deductions.
I can picture that.
You have to choose your accounting system before the first dollar comes in or goes out.
So what's the choice there? What are the options?
It's really a spectrum. You could start with a manual system, like a really well-organized spreadsheet, or you can jump right into dedicated software, like a QuickBooks or a Wave.
And I guess that choice depends on your business structure again.
It does. If you've incorporated, you pretty much need proper accounting software for corporate tax compliance. If you're a simple sole proprietorship, a spreadsheet might work for a while, but the moment you start to grow, you'll need automation.
The key point is to decide on day one and stick to it. Don't let it pile up.
You're just borrowing stress from your future self if you do.
That is a perfect way to put it. So that whole list structure, name search, the BN, GSTHST registration, permits via MISPAL, bank account, and accounting system, that really is the definitive checklist.
It is. If you do those 7 things, you've built the foundation. You're protected, you're compliant, and you're ready for growth.
So we've laid it all out. But the final thought from the sources connects that very first decision to the consequences way down the road.
It does. We said setting up the accounting system early is critical. So this raises a big question for you to think about.
Okay.
If choosing between, say, a simple spreadsheet versus sophisticated software like QuickBooks is a day one decision, what is the real long-term consequence of that choice?
You mean, is choosing that easy spreadsheet today just setting you up for a massive headache if you go looking for funding in a few years and investors demand professional audited financials?
Exactly. That's the question to chew on. The registration process might be over, but the financial responsibilities start immediately. Use this checklist, navigate the process with confidence, and go launch that venture.
We'll catch you on the next deep dive.